Welcome to Survive, Adapt, Transform. We're focused on solutions for today's operating environment. And I'm joined by an esteemed panel, a set of experts that are second to none. And before we get into the introductions, I would like to say a special thank you to First National Bank for sponsoring Survive, Adapt, Transform. Things like this can't happen without the support of sponsors. And so today, this is the part one of a four-part series in which we'll be focused on all aspects of financial, legal, insurance, operating, construction, real estate. You name it, it's a series in which really is focused broadly on how to survive, adapt, and really transform in today's operating environment. So I will start by introducing our panel. Appreciate everyone joining us today. First, we have Tim Petrey from Davis CPAs. Also joining us is Nils Johnson from Johnson Johnson Law Firm. And then we also have Jim Klingensmith and Brian Battaglia from L. Calvin Jones. So thank you all for being here today. We really appreciate it.
Thank you.
Good to be here.
So to get started, let's do around the horn a quick level set. Give us about a 30-second overview of the biggest thing that's vexing your industry at this present moment. So you talk to customers, businesses out there in the market every single day. What's the biggest thing they're really struggling with at this moment? Give us that preview, and then we'll jump into specifically the purpose of this first discussion is really the PPP, the extension, and what does that all mean from a legal liability and a business operating standpoint. So Tim, you want to kick us off with your quick overview?
Yeah, I think the biggest challenge at this point for most of our client base has been just our short-term planning. Defining what short and long-term are anymore has been quite the challenge. We've tried to keep a lot of our plans within the 10-day forecast so that we're not trying to go too far out beyond that at this point in time, just to see how things continue to adapt. So I think that every industry has been very different, has presented its own different sets of challenges. So getting into some of those 2-3 month plans has been an interesting set of challenges between everybody across the board. Some with different problems than others. Some are business is slow. Some is business is faster than ever. So it's been one of those situations where there's not one solution to every problem. There's a lot of very specific solutions to each individual problem.
So we've effectively shifted to short-term forecasting. So any 3-year plan potentially is out the window at this point, right? I mean, we're lucky if we have a 6-month plan.
Yeah, I mean, I think it's safe to say that 6-month plan is about as long-term as it gets at this stage. Unless you're in one of those lucky industries that had very minimal impact, you'll see some at some point in time. So we're all just trying to retool some of the plans that we had in place and get to work again.
Okay. No, Tim, thanks for that perspective. That's something we'll definitely, actually part 4 of the series is focused on strategic planning. So we will dive back into that here in week 4. Nils, how about yourself? What are you seeing day to day? I know we had a really great, well-attended webinar just 2 weeks ago. We went deep on a lot of the legal implications. So what have you seen since then?
Well, it's the same thing, really, Jeff. The same thing we think about as a law firm. How do we keep our staff safe? How do we keep our clients safe? And not only that, but how do we communicate to the public that, and of course, our business clients are in this situation too. If you've kept your staff safe, if you've made provisions to be as safe as you can regarding your customers or your clients, how do you communicate to that you have done these things to them so that they have confidence and will continue to come to your law firm or continue to do business with you?
Right. That's excellent. And you're right. Confidence is the key. It's literally illustrating. And in fact, who doesn't have a gallon of hand sanitizer? Sorry, it's cutting out from my screen. You can't see it. I have literally a gallon of hand sanitizer, industrial grade, that we've kept in the office, and I have lots of cleaning supplies. So I think you're right. It's very important to illustrate, do it, keep people safe, follow the precautions as issued by the state of Ohio, but then also illustrate the fact that you're going over and above to do so. And then to round out the level set here, how about yourselves, Jim, Brian, what are you seeing from your perspective day to day?
From my perspective, again, yes, a lot of businesses wondering what to do, how to address reopening. But I'll tell you, it's surprising too, and what I found very interesting, there's a lot of positivity out there in our community amongst the business people. And I'm actually surprised how many want to get back to meeting face to face, even though we can Zoom. We still have people saying, "We'd like you to come in," or "We want to come there and meet with you." And so again, we of course follow all the safety procedures. We still have our front door locked with a sign out there to call, to gain entry, so we can let them in, so we know that we're following all the proper procedures. But overall, yeah, it's a lot of positivity out there amongst the business community. So, Brian?
Yeah, I would say the same. I think it might vary a little bit based on a specific industry, but overall, I would agree. It's been pretty positive. We've been out on new client visits, and everybody seems to be pretty relaxed and just happy that we're getting back to some new way of life.
Well, that's great perspective. So the key themes I heard, which we'll be then using this to build out the programming strategy here for this series, Survive, Adapt, Transform, is planning, short-term, long-term planning, safety, confidence, taking all the proper measures to protect yourselves, protect your customers, protect your employees, protect your vendors. And then the great thing is positivity. And that's a new one I've heard. So I'm thrilled to have that injected into this conversation, because I also believe, I amplify your comments, that there is a sense of positivity, and that I believe we're working through this, and putting aside the disconnection between Wall Street and Main Street, where the market's back up to 2019 levels, 2020 levels. It's kind of vacillating a little bit now, but that's not the point of this discussion. So diving in specifically to the topic of today, on the PPP. Tim, we've talked a lot about the PPP. We've had many discussions, many webinars, totaling several thousand people have attended the webinars on the PPP. Where are we today? We recently got word that there's an extension. Can you take us through the PPP extension and what that means from an operating strategy standpoint?
Yeah, it's been a roller coaster, to say the least. We've had a lot of rule changes from the beginning. We've tried to adapt as fast as humanly possible to every curveball that they've continued to throw our way. We went from applying for loans because money was running out to maximizing loan forgiveness and tracking funds with people for their 8-week period of time, to now they've extended that 8 weeks to give people another option to utilize a 24-week period to spend their payroll protection money. So planning has shifted drastically from loan maximization to now long-term viability, getting back to work, and figuring out what the real impact of this is. One of the big things, though, that still remains within that original program is that you're still going to come back down to and limited to your full-time equivalent counts. So you may have gotten a $100,000 loan and spent $1 million on payroll over the course of that 24 weeks. But if you didn't return to your full-time equivalent count, you're still going to be subject to and potentially facing some reductions to your loan forgiveness. There were a lot of fantastic things in that flexibility program. In particular, the extension of time to 24 weeks. One big one that was changed that had less of an impact here locally was moving that limitation of non-payroll costs from 75% down to 60%. But this undoubtedly will give people more flexibility to start the next stage of planning. But it's going to continue to be important to pay attention to the changes to the program as they continue to come out, and working them into realistically what your plan is in terms of getting back to business, because you've got to treat this money as if it's not going to be forgiven. You got to treat it as if it's a loan, and that way you're still making good, solid business decisions in all of this, and you got to kind of treat that forgiveness as truly a bonus, more so than anything else. So we've been given some great tools now with the Extension and Expansion Act here. So I'm really looking forward to getting to work with a lot of our small, medium-sized businesses to helping them get back to work.
What does it mean to have the extension to 24 weeks from the initial 8-week time frame? Does that mean you just have more time to use the allocation, or it's still all about tracking and reporting, right? And if you use it and use it up and allocate it, you can still, is it a benefit to spread it out over 24 weeks?
Sure. Yeah. I mean, there are definitely some benefits, especially for those that were drastically impacted by the extended shutdowns. The restaurant and hospitality industry are going to be the ones that will benefit from this expansion of time the most, because number one, it gives them more time to spend all of the money, but number two, and quite honestly, more importantly, it gives them more time to get back to their full-time equivalent headcount, which is the bigger piece of the equation that a lot of people will forget quickly, is that you were given 2.5 months of payroll to use. Now you've got 6 months to use the money. It shouldn't be a problem using the money. It'll just be a matter of making sure that you can get back to your appropriate headcount. So you can still use your 8-week period of time. If you've used your money up in your 8 weeks and you've gotten back to your full-time equivalents, you can still use your original 8-week period. Additionally, you can use the alternate covered period, which is the 8-week period of payrolls starting after you receive the money. So sometimes that buys you a couple extra weeks to start from the time that you receive the money. And now you have this new ability to look at 24 weeks. The challenge there, in my opinion, becomes some of the unknown at the end of the 24 weeks, is that now you've got to look to that full-time equivalent count at the end of your 24-week period, rather than looking at your full-time equivalent count within a much shorter period of time. And again, everything in our world right now is surrounding some of that, what we're referring to still as that short-term planning, is what happens in the next 6 months will define how you start off in 2020, and that could be a huge difference.
So then I heard unknown, and that means risk management, and that means protecting yourself. There's liability, there's risk management. So Nils and Jim and Brian jump in on this, but what does that mean from a how do you handle the unknown? How do you manage and mitigate those risks?
In terms of law?
Yes.
I think you have to think about how somebody might sue you if you have a business and somebody allegedly got sick when they did business with you. And to do that, you have to think about how the law of negligence works. So negligence, when you're negligent, the law says you have violated a duty that you owed to somebody to take reasonable care not to cause them injury. So you're always talking in terms of what is foreseeable. If I foresee a duty and then I violate that duty, then I can be found to be negligent and have to pay. So foreseeability is something that you have to think about in terms of common sense, and the reasonable care that you must take to avoid a foreseeable problem. Also, one thinks of in terms of common sense. After all, it's going to be a jury of regular folks who are going to look at the situation and see what steps that you took to make people safe, to make your staff safe, and so forth. So a business really should take some of these steps. First of all, they should educate their employees about the best health practices, and that information is readily available on the internet from the various agencies. They should allow flexibility in their work schedules. Now, my wife was talking yesterday, she heard one of the schools was talking about letting their kids come back in the fall, but these, I believe, were elementary school kids. They were going to be there 2 days a week, and the rest of them were going to be there another 2 days a week. In the middle day, Wednesday, they would reclean the school. Well, I don't know whether that's the right program, but at least they're trying to think through the problem, how they can best deal with things. You need to think about protecting your most vulnerable workers, which means your older workers. Maybe you need to encourage them to continue to work remotely until we get a vaccine. If somebody has a cough or fever, you need to have written rules that say you got to stay home for the quarantine period. You need to come up with a systemized program of disinfecting and cleaning and document that. You should make free masks available, and depending on the situation, possibly gloves. There is some disagreement about whether gloves are as effective as hand sanitizing regularly. When temperature guns become available, we just got ours a couple of days ago after a 5-week wait. Probably those should be used as well. Let the fresh air in. It's summertime now. Open the windows. It's clear that from the data that this will reduce transmissibility. Talk to your vendors and the people. You may have done a good job in your business, but people delivering stuff to you, or subcontractors or vendors working inside, you need to talk with them to make sure they've taken similar steps and they're not bringing in something bad and undoing all of your good work.
Wow. So Nils, I want to jump in there for a moment,
Sure.
please, if you don't mind. It's an amazing list. So a question to Jim. There is a lot to plan for. This comes back to planning and documentation and illustration. Doesn't business insurance eliminate the need to be as precise and as committed to planning? I mean, what are you seeing from that standpoint of protecting yourself?
Well, again, since we're into a new unknown, that would still wait to be weighed up. But I wouldn't want to say that you can just relax on being stringent with the safety of everything and cleanliness. As Nils said, the negligence factor, there's a difference between negligent innocent and negligent on purpose. And the insurance works towards what I would say is the negligence by innocence. So you were trying to keep things clean, you were trying to do this and that, you were trying to follow all the safety procedures, yet somebody got sick, somebody sued you, and you're going to have the cover, you're going to have the defense, everything there as they discover what was going on. So if you were willful wanton negligence versus just innocent negligence, where the line gets drawn on the insurance company stepping in. So out of the gate, until they know they owe a defense, they'll do all their discovery, see what they find out. And if, they tend to find out as they investigate, hey, they've been really sloppy. The employees have been nervous. There's a whole different ballgame there. So you still, it's a matter of, is the insurance going to work, or you're going to be calling Nils Johnson?
Right. Well, it's a question of contract enforcement, right? Something that we've discussed before. Insurance is essentially a contract. I's dotted, T's crossed, and if someone can find ways that contract was basically not upheld, then there goes your insurance coverage, correct?
It's not whether or not they find ways, it's more like our job to find ways to see if we can find coverage for somebody in certain situations, but not where there's willful wanton in any degree. So that's the primary difference. You have to follow the rules and regulations of what everybody deems, the Department of Health. So it's established by the Department of Health what you should be doing to reopen. CDC, a lot of different government bodies that are saying, here's what you should be doing. So if you're not following all those guidelines, it's a gray area, then you wait and see.
Right. And so on the waiting standpoint, this gets back to bringing it back to this extension for the PPP. So perhaps a lot of restaurants still have not reopened simply because they now have more time to use those funds, and they're going to wait and see to when they can staff up properly and have all the proper business practices in place to then drive the business more effectively. So it does give them a little more breathing room. Does that sound right, Tim?
Yeah, and I think the important thing to remember when it comes to restaurants reopening is inventory. Is that what happens in the normal cycle of business is that you're able to continue to produce enough revenue to cover your inventory for all of your food and things that you need to get up and running. And the risk that they run at this point is that they go and they're not sure how to stock up the correct amount of inventory. So where you make any money in the food business is making sure that your margins are correct on your food purchases and your labor percentages. If you have no clue how to project what your revenues are going to be, it's really difficult to open correctly. So the trick for a lot of them is opening at the right time, because they're making that one big catch-up purchase of all their inventory that was normally part of just their revenue cycle in the past. So it does give them a little bit more time, but we are seeing people just being cautious and just paying attention to what's going on, paying attention to people that are opening, and just paying attention to the number of people that are willing to walk through the door during all of this, because that's still somewhat of the unknown for them is, how many people are willing to come back and go out to eat and do the things that they were doing before. In planning and budgeting for that accordingly is just going to take time. It's going to take quite a few months to figure out, if not another year, to figure out how to get back into that normal operating cycle. They've now been faced with restricted capacity in the restaurants, and that by itself makes things very difficult because the food business is a game of volume and low margins. And if you can't achieve the volume that you need to get past your point of break even, then it's going to be really difficult to get back to work. So this 24-week extension has been huge to allow those folks a little bit more breathing room to make good, solid business decisions with real information, rather than just rushing into things like they were kind of encouraged to do before when they only had 8 weeks to use the money. So we're very excited for those industries to be able to reopen the right way and take all the other considerations like we're talking about today into account.
Right. So it's something I want to drill deeper on, but we'll do it next Wednesday. Next Wednesday, 7:30 a.m. We'll have this same group together to do part two of this conversation. Is this notion of how do you, based upon managing your risk contractually from your liabilities, from your PPP funding, what happens if you actually did submit something to be covered by business insurance and you did receive payments and the PPP comes in, and there is some degree, as Jim and I, we've discussed this on the phone, you can't double dip, right? And you have to really properly track and manage those allocations of funds. We're going to get into that next week, so I encourage everyone here today to join us on that topic next week. But before we close out this conversation, what's the key piece of advice each of you would give to our audience around this notion of reopening as we're out of survival mode, I believe, right? We're most likely, there are still some businesses in survival mode. We're in adapting and moving into transformation, and there are businesses on different levels of that continuation. So let's focus on that from survive to adapt mode. What's the key piece of advice? Nils, I'll kick it to you first.
You have to follow the proper standard of care, and standard of care involves two things. One, common sense. Use your head. Just think it through. Use common sense. And number two, go to the Ohio Department of Health, go to the Center for Disease Control, and go to OSHA. OSHA in particular breaks things down according to different industries. If you get sued and you can show that you followed the correct standard for the particular point in time, probably going to be okay. These cases are not going to be easy for plaintiffs' lawyers to win, in my judgment.
Right.
Unless, as Jim says, there was recklessness, and we don't want that.
Right. Brian, what perspective, what have you heard? What key piece of advice would you offer as we move out of survival into adaptation mode?
I guess we'll kind of go back to what we've been saying since this started. One would be probably just to make sure you're taking good advice. Also with what Nils said, be smart, use some common sense. But also, when you're out and you have questions, let's face it, there's been a lot of questions we've received on if and how insurance may apply with all of this. Biggest thing is just making sure you're getting the right advice.
Right.
We've been trying to help people from day one. I think now is the time for all of us to continue to support local, do what we can to help one another and lift each other up.
Right. That's great advice, Brian. Jim, how about yourself?
Same thing. It's just be smart, follow the guidelines, and keep things clean, basically. Just be smart about it. I think Nils said it best.
Right. So, Tim, before we wrap up, I know that you've done a lot from a documentation and planning standpoint. What tools do you have that could potentially help people work through this process, especially as it relates to the PPP funding and the allocations?
So we've got a handful of things available. Number one, we've continued to adapt our 7-step process for reviewing and making determinations about how to ensure the best loan forgiveness possible. That's available on our website. And we also have tried to continue to adapt our tracking system for folks that are not using our payroll processing company or using a payroll processing company, period. We've adapted our own set of calculators with the help of a handful of other local CPA firms that we've been trying to use and communicate with the banks so that we have an acceptable way of reporting information to the bank when it comes time to making your loan forgiveness application. So if anybody is looking for any of those resources, you can go to our website. You can send us an email. You can request any of those things, and we're happy to share those resources with whomever might need them. Great.
Excellent. Well, to maintain the commitment to time and focused on this strategy, Survive, Adapt, Transform, it's solutions for operating in today's environment. We are going to wrap up the discussion, and this is the reason why we have broken this conversation out into 4 parts here over the next 4 Wednesday mornings at 7:30 a.m. So anyone with questions specific to business operating strategy from a financial, accounting, legal, insurance, real estate, construction standpoint, please send those questions into us. You can send it to resources@business-journal.com, and we will incorporate that into the programming, and we will also use that to feed the conversation and dialogue. So with that, it is just about 8 a.m., so we are going to wrap it up. I do want to thank Tim, Nils, Brian, and Jim for joining us today on Survive, Adapt, Transform. And I do want to thank our sponsor, First National Bank, for making this possible. So thank you all for joining us today. We greatly appreciate your time, and we will talk to you again next week.